Welcome in. Homeowners insurance is one of the most misunderstood pieces of a real estate transaction, and honestly, one of the most expensive surprises for buyers right now. Premiums across the country have risen an average of 11.3% year over year, and Idaho has seen increases mainly tied to wind, hail, water losses, and inflation in rebuilding costs. Today, we're unpacking what buyers actually need to know because a misunderstanding about coverage, roofs, or deductibles can delay closing, blow up a deal, or leave a client financially exposed. KJ Aldrich is the insurance expert on this, so be sure to look for his contact information at the end of this webinar. And I'll tie everything back into lending side so you understand how insurance directly impacts ratios, affordability, and underwriting. I'm Kiersten, your lender and guide through this webinar. I am with the Landers Group at Empire Home Loans, and I love being a mortgage broker. I have access to almost 50 different lenders, which means, like KJ, I can shop the best rates for my clients with one application. Plus, according to a 2023 independent third-party study of the Home Mortgage Disclosure Act, brokers like me save borrowers an average of more than $10,000 over the life of a loan. What I see constantly is buyers caught off guard by insurance. They think it's a simple checkbox, but it affects payment, DTI, escrow, cash to close, and even whether a property is lendable. So I love teaming up with experts like KJ who help me educate buyers before the problem hits. As your local Caddis Insurance agent, KJ is committed to helping you find the right coverage for your needs. His mission is to provide exceptional service, strong relationships, and comprehensive insurance solutions. KJ focuses on personalized coverage because every home and every family is unique. His goal is to give you peace of mind through trust, transparency, and long-term partnership. And KJ isn't here to sell you a policy. He's here to protect your assets. Independent agencies statistically save clients 18 to 27% over captive carriers because they can shop around, especially as premiums rise nationwide. On top of that, 64% of denied claims happen due to misunderstandings about coverage. Not because the client didn't have insurance, but because they had the wrong insurance. That's why having an advisor like KJ matters. Homeowners insurance used to be predictable. Now it's one of the fastest changing pieces of home ownership. In 2024 to 2025, carriers nationwide filed for rate increases up to 30%, depending on the region. Even Idaho has seen adjustments because rebuilding a home in 2025 costs far more than it did in 2019. And here's the part buyers don't know. When carriers pull back in certain risk zones, fewer available insurers automatically means higher premiums. So buying a home today requires understanding what will drive future insurance costs. HO-3 is the most common policy, but the coverage inside each category varies wildly. For example, personal property is typically covered at only 50 to 70% of dwelling coverage. And certain items, jewelry, firearms, collectibles, have extremely low caps unless scheduled separately. Liability is the most underrated coverage. A dog bite, a slip and fall, an ATV accident on your property, these can cost hundreds of thousands without the right limits. Most homeowners sit at 100,000 liability, but the national recommendation is 300,000 to 500,000 minimum, and many should consider an umbrella policy. This slide is the deal saver. Buyers assume insurance covers anything water related. It doesn't. For instance, sewer backup coverage is almost never automatically included, yet the average claim is $7,000 to $15,000. Flood damage? 1 inch of water causes an average of $25,000 in repairs, and it requires a completely separate FEMA policy. Understanding exclusions prevents financial disasters and closing delays. Water is the number one source of homeowner claims, but the type of water determines if you're covered. Most denied claims fall under seepage or backup, two categories clients didn't even know existed. If buyers learn these distinctions up front, they can protect themselves and avoid future denials. Buyers constantly ask why the insured value doesn't match the purchase price. The reason? Insurance is based solely on reconstruction cost. If materials go up, coverage must increase. Underinsuring by even 10 to 15% can trigger a co-insurance penalty, meaning you get less money during a claim, even a partial one. The goal is proper coverage, not matching the MLS price. A deductible shouldn't be a guess. A buyer in a hail-prone region might face a separate wind/hail deductible that's 1 to 2% of dwelling coverage, meaning a $400,000 home could have an $8,000 deductible for hail. Higher deductibles save money, but if a family doesn't have liquid savings, they can't absorb a larger loss. A strategic deductible protects both budget and property. Roofs are the biggest reason why policies are denied. Many carriers won't insure roofs older than 15 to 20 years unless they're in good condition. A bad roof can stop a mortgage closing entirely. Buyers should know roof age before offering. Home inspectors miss things. Insurance underwriting does not. Insurance is part of the monthly payment. So if premiums spike, it can push debt ratios over the limit. I've seen loans fail because insurance came back $75 a month higher than expected. We cannot close without a bindable policy. So the sooner buyers get quotes, the smoother the process. Insurance companies share claim histories through what's called clue reports. Too many small claims can cause premiums to skyrocket or a carrier to non-renew. Even a prior claim from the previous owner can affect your policy. Calling your agent first can prevent a premium increase of 20 to 40%. Bundling is usually great, but not always. Families with teen drivers or multiple auto claims may pay more bundling than separating. Luxury or high-risk homes sometimes require standalone policies. Independent agents can run the comparison both ways to see what actually saves money. So there you have it. I hope this webinar answered some questions, but I hope you have some more questions too, because that means you paid attention and want to take the next steps in speaking with KJ. Caddis isn't chasing the cheapest premium. They're building a protective wall around your assets. They proactively reshop policies when rates increase, offer personal guidance during claims, and educate clients so they understand what they're paying for. I have included the direct number to reach KJ, but you can also scan the QR code on the screen to visit his website. There you can get a quote, learn more about Caddis, and much more. KJ is busy, so I wouldn't wait if you have questions. For realtors and buyers, knowledge here saves deals and protects families. Insurance is part of the financial strategy of owning a home, not just a requirement. If you need guidance, reach out to KJ for quotes and coverage. And for all lending questions, loan programs, budgeting, navigating approvals, reach out to me anytime. On this page, you will find my direct number. You will also see the QR code for my website, landerslending.com. There you can apply for a loan, learn more about what I do, and discover more resources for buyers. I want to thank you again for joining me for this webinar. Please don't hesitate to reach out to KJ or myself if you have any questions or want to buy a home. I look forward to guiding you on my next webinar.